It's September 17th, 2009. I'm Jeff Underwood, personal finance coach and certified mortgage professional. This is my weekly mortgage market and rate update with Jeff. Hey, I hope you enjoy this information. I've got some outrageous numbers to share with you and some crazy things happening at the banks. So enjoy this message. Also, if this is your first time receiving it, make sure to subscribe to get the updates. It's directly below the video. Also forward to your friends, family, and coworkers because they may enjoy this as well. Take care. Hey, the first thing I want to talk about is the tax credit. The tax credit for home buyers, the first-time home buyer tax credit, is set to expire at the end of November. Don't get confused. It's not the end of the year. It's the end of November. So you need to have closed and purchased a home before the end of November to get the tax credit. I know there's organizations out there right now pulling for the extension of this tax credit, and it may happen. But until then, it's set to expire the end of November. If things change, I'll make sure and get an update out to you so that you know that it has been extended or in what form or format it has been extended, okay? In banking news, a Wells Fargo executive has been using a foreclosed property, a multi-million-dollar foreclosed property in Malibu, California, to throw parties on the weekend. Is that not the craziest thing you've ever heard? This person obviously is an idiot. Last I've heard, he has been fired from his job, and rightly so. Let's talk about some outrageous numbers. Of the 20 largest banks that received bailout money last year, those 20 CEOs averaged $13.8 million in pay. Average per CEO, $13.8 million in pay in 2008. There's something wrong with this picture. That adds up to 436 times what the typical American worker received last year. 436 times what the typical American worker received last year in compensation. There's something wrong with this picture, folks. They've got the biggest bailouts, they perform the worst, and they got paid big bucks. You know what? I wish I'd get paid a lot more if I would stink at my job. One of the reasons these CEOs are able to make this kind of money is because of late fees and other fees. Let me give you a budgeting and money tip right now. According to the FDIC and RK Hammer Consulting, the projected amount that credit card companies will collect in late fees, over-the-limit fees, and other fees is going to be around $20.5 billion in 2009. $20.5 billion in 2009. Let's break that down into per day. What does that equal? Well, it's $56.1 million per day in 2009 that they will collect. And again, over-the-limit fees, late fees, and other fees. Do me a favor, make sure you pay attention to the limits on your credit cards. Yes, I know some have been dropped, but just do me a favor, check those things again. Pay attention to what you're spending on the credit cards. Don't give these folks any more money than you need to. You think that's a big number. The banks, now that was credit card companies before. Here's the bigger number. Banks are projected in 2009 to collect in overdraft fees, debit, checking, savings, ATM, and other fees are projected to collect up to $39 billion in 2009. Remember, the credit card companies were $20.5 billion. Banks are $39 billion on overdrafts, debit, checking, savings, ATM fees, and other fees. $39 billion. Let's break that down daily. Here's a big number. $106 million per day in 2009. That's where our money keeps going. You know what bothers me? Many people in America are broke right now because of what's happening in the economy, but yet the banks are still willing to continue to take money away from us even though we don't have it. So do me a favor, pay attention to your bank statements. Don't let that $20 purchase of gas or $20 purchase at the store cause you to have $300 or $400 or $500 in overdraft fees, because I've seen that happen. Don't let it happen to you. That's my tip for this week. I want to talk a little bit about rates. Rates have been hovering in the range between 5 to 5.5, and I say this because, I say the percentage range because it all depends on the borrower's situation, the type of property. Here's what it depends. It depends on credit score, depends on debt to income ratios, loan to value, how much of a down payment are you putting down on the house, Type of property, is it a single family residence, a duplex, a condo, a townhome, and the type of mortgage product. So there are a lot of variables that go in to decide what your mortgage rate would be if you were going to buy a house. For obviously the best credit situation with some money down, money in the bank, debt to income ratios are in line, it's going to be closer to 5%. APRs are ranging between 5.2 to 5.8 for the actual annual percentage rate, but actual interest rates on your payment are between 5 and 5.5. With rates as low as 5, still historic rates. And here's what I want to tell you that's happened this week so far. Retail sales came out on Tuesday. They were actually better than expected. Normally that would cause rates to go higher. We haven't seen much of a movement in rates on Tuesday, and then Wednesday inflationary numbers came out and they were pretty much in line. So we haven't seen a lot of movement with rates, but again, by subscribing to this weekly update, you will get some information about rates on a regular basis. If I see something change midweek or before my next report's going to come out, you'll get a quick little update to tell you, hey, this is what happened. Keep an eye on rates. This is what's going on. Hey folks, if you like this, do me a favor. Make sure you forward this to your friends, family, and coworkers, and share it out on your Facebook page and MySpace and other places that you have your social media. I would really appreciate that. My goal really is to just help you understand more about the mortgage industry, banking industry, and hit you with some hot topics that are happening in those two industries, and then keep you updated as rates continue to change. So have a great week, and we look forward to talking with you real soon. Take care.